The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at the old DAX. You can see the beautiful colors on the picture, but you can see them better when you look at them in a smaller time frame. That we're going to do right now. My friend over in England really does a beautiful job with these. You can see these little triangles there. They're just showing the completion of triangles related to the ratios. That tells you where the cycles are. You'll notice that we're right near 61% retracement in the DAX. It's a longer-term downtrend possibly, but there should be a little bounce in here possibly. We don't know that for sure. The next one we're going to take a look at, of course, is the FTSE. That's been one that has been following along pretty nice. We had a really long ABCD pattern that completed way up there. Then we had the Gartley pattern complete today. It's backed off a little bit from that level, so that one's starting to move along a little bit. But the one that I really think is really interesting here, that we've been talking about it for quite some time, has been this Bund chart. This is this long-term Gartley pattern. You can see here, this is the weekly chart. We went all the way up to that 166 level. We've dropped about 3 handles, but with the big wide-ranging bars down, this is telling us that most probably that this market has made some type of a top for interest rates, i.e. higher bond prices. Excuse me, let's row that boat back into the yacht harbor. It means that you're having lower prices in bonds and higher interest rates. We're seeing pretty much the same thing here in the U.S. market, but that's what we're watching as we look at that one. But that one did work the way that we happen. Now, a lot of times these don't work, of course, but those are the main ones that you're looking at. The big moving today is the euro. We're way below that 1275 level. We're getting close to that 1210 level again. That has been there for quite some time, so we'll have to watch that very, very closely. Let's take a look here. We're at real critical support that we just this is the S&P. We'll be switching over to the June S&P next Thursday. That's a week from today. It's always the second Thursday of the month. So next Thursday we'll be switching over to the. You should be switching over to the June contract already, because that one will go off. It'll definitely go off the board, I believe, on the third Thursday of the month. So I'm starting to look at the June. Wow. We're going to start looking at the June S&P. We've already switched over in the bonds. Let's take a quick look here at the E-mini. If you'll look at the price action since way back on February the 8th, we had that big consolidation top up there between the 24th and the 1st of March, right at that 128, the 2820 level. Had the big move down on Monday. We had the rally back right at the 61% retracement at 2797, and now we're heading down. It looks like we're heading down to 2750 possibly. So that'll be the one that we'll be looking at most actively. Let's take a quick look here at the E-mini NASDAQ, because it is also a very nice pattern that lines up here. Folks, if you have any questions, feel free to call in 877-927-6684. Be happy to do that if I could. There you go. You'll see that we're down at this low that we very, very similar to like the S&P, around 70.80 in the NASDAQ. I haven't updated it, but I believe we're still above that. So that's one that is, very, very interesting to pay very, very close attention to. So 877-927-6648. I hope that's what I said. Well, let's try it out anyway. Okay, we're also over this time that we should start getting a rally in the gold market, folks. We're down 11 days now, and we're extremely oversold. So you want to keep an eye on for a rally in the gold. What we're looking for is a potential rally of a 382 variety that would take us up to the 1 point to the 13.08 level. That's about $20 from where we're trading right now. Now, I did have a question from one of our listeners. I want to answer that one now, and I will bring that up to you here. This is the chart of the Dow Jones Transportations. As you can see here, this is the weekly. This is one of the reasons why we were bearish. You notice last week the transportations did close lower. We're down 10 days in a row now in the transportation, so that's that's very, very oversold. But the key here is the fact that you had the double top in the transports, as you can see. Then you had the 135 pattern. That's where each of the ratios that you're looking at are lower than the other. So you have lower tops, lower bottoms, you're in a downtrend, and that's what it looks like from the transportations. That 135 pattern was given to me by my friend Roy Longstreet and his son Bill back in 1985, and it doesn't work all the time, but my goodness, when you line it up, it's really nicely. It also is nice when you notice that the move between up into 0.3 and up into 0.5 are either, they're either 5 or 8 day or week rallies, because that tells you that the timing is correct. And if you measure the time between top 1, top 3, and top 5, if they line up, then you've got a beautifully symmetrical pattern, and that's what we had. Years ago, folks, we used to have the old Dow theory with Richard Russell. He passed away just a few years ago at the age of about, I think it was 96 or 97, still trading, still writing his newsletter up until the very end, which, as we bring it to our attention, since I'm in the 8th furlong of a 8th furlong race, I hope I can make it that long, because it's a lot of fun. Anyway, we had the Dow theory where you had the Dow Jones Transportation had to confirm, and you had the Dow Jones Utilities had to confirm, and you had the Dow Jones Industrials confirm. But they don't even talk about that anymore. That's gone by the wayside. I don't believe anybody picked up the gauntlet and is doing his letters anymore. I'd have to check with Arch Crawford, because Arch certainly knows that they still do that. Let's take a quick look here at this Dow Jones Transportation, because here again you're looking at one that is also indicating that a pretty big top is here. We did go up and make that double top on Monday and Tuesday, and so that did complete that double top up there. So all of these are in place. It tells us it looks like it's going to be very, very interesting. I see that our little princess from the Upper East Side there in New York just went long the gold at 1284.5. I like that position. That's the only thing negative about it. Joking, Maria. That's got a really good chance, because we're down. We took out. Oh, I wanted to show that to you. Shut the front door and raise the rent. Thank you, Maria. Here's what I was watching last night. I went to bed. Actually slept a little bit, but I was looking at this particular pattern here. Give me 1 second here. Doggone it. Where are we? There we are. Hold on a second to get this up here to take a look at it. Hey, I won't say a word. All right. This is what I was looking at in the, I'll cover this when we get back. I'm sorry, folks. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a chart, this hourly chart from the gold of what I was looking at last night before I went to sleep, because I wanted to be a buyer of gold down there at that it was actually 1280, I think, yeah, it was, well, you can see it there, it's 1289, the 1.27 expansion, and I just put a $3 stop in it beyond the 1.618 level. Well, it missed it by about $1, and then it rallied very quickly, $600 up to that 78% level at 1288. And now we're trading at 1284.60. The reason why I'm bringing this up now, and I'm glad that Maria posted this trade that she's looking at, is because from the low we made down there at 1281, I was trying to buying at 1280.50, just a tad below 1281, and it rallied up to actually hit 1289, and it pulled back exactly to a 61% retracement here at 1284. So here's a situation where she is in the den. She's posting this chart showing what she's doing. She doesn't go through the description because she doesn't have the time to do it, but I'm trying to describe, what she is doing. I'm pretty close to what she's doing, I guess, because I worked with her quite a while. She's a lovely young lady. But anyway, there's several people in this den. I mean, there's a lot of people in the den that post some great trades, folks. So if you're out there in trading land and you're wondering about what other people are doing, take a look at the trading den. The Tiger Den's got some really smart people in there, folks. Plus, you get to listen to some really great people in there. You've got Basil Chapman, David White, Tommy O'Brien, Steve Rhodes, who's the #1 timer for Timer Digest, and I know I'm probably forgetting somebody, but those are some really smart people posting the trade. Now, this might not work, and if it doesn't, she'll be banned from the room for 30 days. As we always know, every time anybody has a bad trade, they are banned from trading for 30 days. If that would be the case, this would be a desert of radio show. In other words, nobody would be here because you always are going to have to focus on the losses. The profits will take care of themselves, so focus on the losses. That's the key to basically winning as you're trading. You don't know which ones are going to work, and you don't know which ones are even going to start out profitable or not. So your biggest thing is how much you have to control. That's the only thing you can control in the risk-reward equation. But that's an interesting one, Maria. I really like that one. That's on. I hate to. Oh, that put the kiss of death on. Anyway, it just should work. I mean, I don't know if it's going to or not, but it's got all the earmarks of that. If it doesn't work, Maria, we'll put a coupon in the mail to you so that you can go out and get a Starbucks coffee. Longer term, someone's asked me about the gold chart of why I could be so very bearish, and I'll put this up here. This is the long-term. By the way, someone's just told us that the Richard Russell newsletter is being done by somebody else, and I appreciate that. I guess you'd have to just go in and just Google Richard Russell or Dow Theory, and you'd be able to get it right there. So you'll take a look at it. Here's another instance of great information. Mr. Z's telling us that today that gold contract hit 1280.80 on a spike low at 3 a.m. and a volume of 9,000 contracts over a 5-minute period. Folks, that 9,000 contracts aren't small specs. Those are people that are making a really big bet. So keep an eye on it. It's very, very interesting what's going to happen here. So we'll keep a close eye on that. I want to bring up this chart here with the long-term gold weekly. You'll see this, that we made that big 78% spike. That's when Newmont Mining was going to take out Barrick. I believe that, I don't know if that merger is going to go through now. I thought someone said that it was not going to go through, but we'll have to do that, one day at a time, because I don't really follow the news on these stocks at all. It's just has very little lack of interest in it for me. Oh, I did want to show you the you remember that Bund chart that was having the big down move? I wanted to show you the early morning 4-hour chart on that too, because that's been a real interesting one, to see it unfold. It's very, very, very interesting. So we'll keep an eye on that. Okay, hold on one second here, and we will move on to the next one, and we'll be just fine. The next question was about one of the currencies that we've been following, and I still think we're heading down to that level. That is the Australian dollar. Also, the Canadian dollar had that really nice move up to the exact price at 134.50 yesterday, and we're now trading about 35 pips under that. So I would have you stop at break even if you're certainly in that one. That would be an interesting one to take a look at it. The next question, I've got it right here. I want to bring it up. I want to show you the chart for Bitcoin, because there's a little bit of news out there now, maybe bringing cryptocurrencies back to life. But we've had about $100. Can you stop and think? It's trading at 3,800, but it's held that retracement level relatively well. If we can get Bitcoin above that 4,400 level, it's got a chance to have some pretty good legs. We could be looking at it to double in price or even more if we get above 4,400. Now, don't forget, there's thousands of these cryptocurrencies out there, so it's not about cryptocurrencies, it's about the blockchain technology. So that's pretty much. We've got something from our good friend David White on the uncertainty principle. To trade without fear or overcome confidence, perceive what the market is offering from its perspective. Stay completely focused in the now moment of opportunity flow. Spontaneously enter the zone. It is strong, virtually unshakable belief in a certain outcome with an edge in your favor. And the key thing there is virtually, because these don't always work, and you always have to be protecting yourself. When I walked through that trade that Maria's doing, it's because it was lining up with what I was looking at last night. And, I just wanted to walk through the sequence of it, because when you're looking at a 4-hour chart and you think you're getting ready to buy, you can move down to a 15-minute chart to see if everything is lined up. And, you're trading a contract that's, got a margin of about $3,500. And it's got a value of $128,000. So you got a lot of merchandise on the shelf when you're trading gold, and also crude oil. So those are ones that you want to, pay close attention to. So that's what we're watching here this morning to see if this is going to work or not. But again, it's all about risk control, folks. It's not about anything else. Now, there was this Kimball charting service, this guy, I don't know, I forget his name, is Ron Kimball, I believe, but he sends a lot of these things out, and someone sent it out to me from Canada, so I wanted to bring it to your attention, showing gold, the same chart that we were looking at that I posted going back to 2012. It doesn't show any Fibonacci relationships, of course, but it is showing trend lines, and it's showing the pennant that's there, and that the fact that we did go up and touch it and we backed off, it doesn't show why, but we think we know why, and that's what we're watching. So the key here in the gold market is whether we're going to get this rally back, and the first level would be 382. We came down, what, $68 from the high, and you figure out what 68.2 on that is, and you'd be able to, quickly know that it would be about $27. So that's what we're watching at 1308 in the gold. Watch it closely if we get there, very, very closely. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're taking a look here at the euro. You notice that we had that 61% retracement last week up there at that 114.20 level. We're now trading at 112.46. The old low that we have back here is at 112.23. And believe me, we're not very far away with that big wide bar today. Once we broke below 13.10, this market was a one-way Corrigan straight down. So it looks like this could be breaking down, and that would lead to some of the larger time frames that we're looking at here in the euro, because if you look at this long-term weekly chart, and I'll bring it up here in just a second so you can take a look at it, it shows the negativity that is there, and this is after a nice 8-day rally here. So we're getting ready to take out a triple bottom here at the 20 or 1230 level. Now we have to take that out. It might stop again because, as we know, we saw that triple top stop in the dollar index up there at 98. So it's got to get below 112, and that then I would think, and close below there, then you would have a really strong indication that U.S. dollar is getting ready, to have one heck of a rally. And it certainly is a very unusual situation going on here, because with this trade tariff, the way they're beating up the grains again, it looks like that you're going to be looking at a situation where you don't have an agreement coming, and they're pushing these grain prices down one more time and giving them away to China, just like they did with the Russian grain robbery way back in 1972. Nothing's any different. The same old, same old. That's what it looks like. So we'll keep a close eye on these things as we walk through these patterns that we're looking at. But right now we're trading it at 112.47. The key level in that euro is 112.20. That was the old low that we had below that. But that will be very, very near that long-term 61% retracement in the euro. It comes in at 112. So it's very interesting, because we get below there, folks. You're breaking down, and you're going to be looking at a higher dollar. No question about it. That dollar index is, it's got a lot of legs in it. If you look at this dollar index, we'll just take a quick look here at the dollar index. You'll see here's where we are. This is as of Friday, and as you know, we're running up pretty strongly today. We are, we made the beautiful Gartley down there just last Thursday, and you can see what's happened. We've had a really strong rally, and we're getting ready to take out that 97 level. The ABCD structure on this takes it to 98.50, so the dollar does not look weak. That's the way it is now. Right now, it might change in a heartbeat, but that's the way it's looking right now as we watch this. David White is asking a question about the old bowling thing that happened back in the early 60s. The Brunswick, this is when everybody was going to have a bowling alley in their basement. David, I don't really remember much about that. I was basically trading corn and stuff like that. I really didn't get it. I've never got into stock trading very much at all, because it's all been futures and forex related. I've done some, of course, and stocks work really great. It's it's like watching butter melt, but it's still profitable. You can certainly do that. Yes, I do remember I was a pinball setter. Yes, I used to go behind the thing there, and I used to set the pins at the Vigo County Bowl in Terre Haute, Indiana. My father was a very good bowler. He bowled a 297 game once, and that's when hardly anybody bowled a 300 game, but he did bowl a 297. And the story behind that they told me about it, because I was just a little shaver, is that on the last ball that he threw to make the 300 game, he threw it behind his back, just to be the devil may care type good guy that he was. And he only got 7 of the 10 pins. Instead of bowling a 300 game, he bowled a 297. All right, here's one that I want to bring to your attention. We've talked about the transportation and the others, but the other one that is interesting, that has really, really shown its true colors here, folks, and that is the, let's get this up here. Very good, Mr. Bill. Here's the head and shoulders pattern on the long-term composition of the weekly. We did get right up to that level, match that red line. We now have turned sharply lower, of course, but that is a head and shoulders pattern. It has symmetry, time, everything that you could possibly ask for. Now, if we get above those weekly highs, and this is breaking out, we will go to new highs very, very easily. We're in a pretty big sell-off now. I believe we're down, even though we had that strong rally on Sunday night, which was basically some type of a movement about the Chinese trade thing, and now you notice that that's probably going down the wayside. It's amazing how they tell you these things, and then they don't turn out to be the way you think they should be. It's always amazing to take a look at that. I've been asked to take a little quick look at the Treasury bonds. I wanted to get this up to your attention here to show you. I believe we are heading lower. in the Treasury bonds. We're having a little flight to quality today, but it still looks like we are heading lower in the Treasury bonds, lower in the notes. Both of those look very bearish on a long-term basis, and it certainly appears that they want to be able to work. Now, there's one commodity that we're really trying to get long, and we haven't been able to do that. I want to bring this up here so you can take a look at it. This is this natural gas. You can see the bottom that we made down here just 2 weeks ago. This is the weekly. We're waiting to try to buy a pullback, but the market just keeps ratcheting up little by little, and it's going to be interesting. Okay, David's asking the question, do I have any other comments about bubbles? Oh my goodness, I've been in some of these bubbles. The 1972 grain market was a bubble. We had a bubble in the grains in, I believe, 2011 when beans got to $18. When I first started trading, if beans in the teens, they said that would happen sometime back in 72, and it did. It got up to almost $12.90, I think, was the high in July beans that year, and the beans in the teens was something like a dreaming event, but they did get there. They got to $18. So I've been, and in commodities, I've been through all of the bubbles. I have not, I've been through 2008, 2007, and all I do is, folks, trying to pick these tops is really difficult, but if you're waiting for a really good pattern to try to pick a top where you don't have to risk very much, watch for the 3 drive to a top pattern. That pattern is really, that's why they call it 3 drives to a top. It was named that way by a man named George Cole in Key to Speculation, a book that he wrote in the 1930s that John Hill got me interested in, and that's a tremendous one. Gartley had it in his book also. But that, when you get to that 3 drive pattern, you got a lot of things going for you, especially when you're looking at drive 3 being a 1.618 expansion. That's the kind of thing that you're really wanting to look at. That's no question about. Let me just show you a major top here. Just since we're talking about that, it's a good thing to review some of these things. So just give me a second here to pull these Treasury bonds up, and we will show you what we think is a pretty big top here. And we'll just move down to the weekly, and we'll get this up here, and you'll be able to see it. Here we go. There we go. There's a 3 drive to a top band. All right, here's the, you don't even have to be very risk-free to trade this. This is a really, really low-risk trade. Look at this long-term weekly AB, the 3 drive pattern back in 2016 on bonds. That's how a top is made. That's how bottoms are made, folks. So very, very interesting. Pay close attention. It's going to be interesting. So that's it. Be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I posted a chart of the monthly Treasury bond in beautiful colors, as you can see, from our friends at Ensign Software. What's important about that monthly chart, folks, is if you notice the cycles that are there from your drive 1 to drive 2 to drive 3, those are perfectly symmetrical within one, of course it's a monthly chart, but it's in the month that it was supposed to happen, and you can see the ABCD structure, and that's really what it's all about. Is nothing more to look at. If you looked at a chart and someone asked you where would be the best place to sell the wheat or sell Treasury bonds, they could look at that and say, that must be the spot. And if you drew the patterns in and showed them the cycles, they'd be looking at something and say, well, maybe it's not nearly as risky as we thought. So that's what we'll pay attention to as we go through some of these other patterns. But remember, they fail a lot, so you've got to focus on the ones that don't work. That's the real key. And speaking of one that's not working, we got to bring this one up, folks, because this one's under tremendous amount of pressure here. This is the wheat market. We've gotten as low as 439 now in the May wheat. It's broken down badly. I think it's trading around 443, 444 right now, but it's broken below that 78% level. It's broken below the 1.618 expansion, so you really just can't do anything with that. You just have to wait and stand in front of, hey, we got Mr. Z on the line. Hey, Mr. Z, what's it be?
Good morning, Larry. Hey, I wasn't calling about wheat.
You're calling about silver.
Observation about that. Yes, what you've just mentioned is true and beyond dispute. What I can share with you that just would add to that is that in the wheat market, speculators as a group had been long and holding long for literally 12 months now. And during this past 4-week decline, the speculators took their lumps, took their losses, bailed on the longs, and now have built up a sizable short. In other words, a lot of the past 2 weeks decline is actually speculators shorting the market at lows. And as you and I both know, speculators as a group tend to be wrong when they all crowd together. And said a different way, the wheat market is declining, no bottom yet, but there is sizable short covering fuel that's now in the market that, could be lit. Maybe it doesn't get lit, but I share that with you.
I agree with that. It's certainly oversold, and we've told the story about the Russian grain robbery, and there could be some deal being made that we're going to sell them a whole lot of cheap grains for some type of a tariff agreement. You don't know how these things unfold in these quiet boardrooms of Politico. But it's very strange, and even it's affecting corn now and also beans. They're hitting pretty good, and we're not even starting planting. It'll be starting in about 2 weeks, so it's going to be an interesting one. We've had 4 straight years of bumper crops, and so my assumption is we have to look at something as an outlier event, and that's what we're looking for possibly. Is a situation where the weather might change because of El Nino, and then you'll get some runs. People are not going to stop eating, that's for sure. The question is that how low are these prices going to go?
Very good, Larry. I called in actually to ask you, please, about silver. Specifically, I have this question. The silver market has declined quite dramatically in the past 2 weeks from the high up at 1620. And the Fibonacci 618 support mark, the retracement mark, is at 1480. My question is, Larry, given the way that silver has fallen here down to 15 right now, is there anything that you see when you look at your daily charts that tells you or gives you a clue that 1480, if tested, would actually break? I'm just looking for some guidance there based upon your experience, please.
Well, John, I'll tell you what I'll do here. I'm going to bring up this chart here of silver because it is setting, as we speak, at an exact 1.618 expansion of the low that we made back on February the 14th. We rallied up to a double top after that point, and now we're making the exact 1.618 expansion to the downside, and the low today has been 1498.50, so it's within 3 cents of that, and that happens to also be a perfect 50% retracement of the low that we had back, in November. So this is, you don't have to risk very much here. You don't even have to worry about picking a bottom. You just put your stop at, say, 14.95, and you only have to risk, $250. Okay, or you could put it under the low if you like. That's how sensitive this is.
Larry, that's, I confess, I do not use CQG as a data source, and I do apologize. I am not a user subscriber to Ensign software with the Pesavento patterns, but and of course I use your tools since you've taught me way back in 2005 and 6. But boy, I had a hunch I'd call and ask you about silver, and you'd have something important to say. So
I don't know if it's important or John. That's just what I'm seeing. Remember, I'm wrong a lot. So.
Right. If not important, at least of interest. Let's put it that way. So,
sure. And it certainly is.
We can't ask for any more than that. So I appreciate it.
Well, whether it works or not, the key here is the risk control. You're talking about trading a contract that's worth $75,000, and you can trade it for under $300. That's a pretty good risk-reward ratio. So that's what we're. And don't forget now, we're down 2 full weeks. Because we topped here, way back on the 20th of February. So we're 2 weeks into this down move without a rally at all. This thing hasn't even bumped. So we're certainly due for a counter trend rally here, whether we get it today or tomorrow with that new moon. You'd think there would be, but this is the last day for it. If it doesn't turn today, you have to consider it's a look, John. It's already jumped 2 cents since we've been talking. The people must be loading up on it.
Yeah. I'm just buying 10,000 contracts right there, Larry.
Yeah, well, that'll move at 2 cents for sure. 10,000 contracts you'd be looking at 1540 most probably. So anyway, we'll see.
Say, speaking of which, we've talked about this in the past. I'm wondering if you can pop up your daily updated copper chart. It's
sure.
Double topped at 297 area, and we've pulled back nicely. I've been focused upon 285 as being a potential floor going forward at this point. Is there something that's lining up in your work right here, I'm wondering?
Let me pull this up for you. I'll have it here in just a second. If the commercial comes in, stay with us, and we'll talk about it after the break, because it does look like we've had some type of a I'm going to do it 2 ways, John. I'm going to blow it up to see the last 18 months, and then I'm going to make it smaller so that we can see exactly where we are. And then when you get back from the break, we'll talk about copper and see what it looks like, okay? So stay with us.
Thank you, Larry.
You bet.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Mr. Z from Philadelphia. John, if you'll notice that 4-hour chart that I posted into the room, you see an absolute perfect A, B, C, D pattern right at the high to the exact tick. And if you'll notice the retracement we made on the C leg of that, we're approaching that right now. You can see if we can get it down to about I think, is it 289 or something like that, a pound. That would really be something that would line up perfectly symmetrical. So it is a bull market, and that would be your first correction. So I don't know if that helps or not, but that certainly lines up beautifully. That's that 3 drive pattern that we focused on the daily, and all I did was bring it up on a 4-hour to see it a little more clearly, and it does have some beautiful harmony in it. So that's what I'd be watching.
Larry, it always helps. So yes, thank you kindly. And in parting, can you, with the E-mini S&P, the March is down under 2750. Can you just share in closing your show any downside targets that you might have? I will listen offline. Thanks so much for your time.
Sure, not a problem. We'll post this up here so you folks can look at it. We did this, of course, on Monday looking at it, but if we go back and look at the 61% retracement of this move from the last on the 8th, you'll see that you get up. We're at the 50% retracement now. We'd be looking at around 2732 would be the 61% retracement of this move. That would be, I'll bring this up so you folks can take a quick look at it before we leave the thing here, but that would be the really first objective. But we're right at the 50% one now. That's where their first breakout occurred above 2750. So that's what I would be looking at as below 2730. It's got major problems. I think it's got major problems, no matter what it does. So we'll see. So let's keep an eye on that and live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.